Money laundering, bribery and corruption and terrorist financing all go hand in hand, so it's no surprise that preventing financial crime is both a huge challenge and a key priority for governments and crime agencies across Europe. It's estimated that less than 1% of all money laundered in the UK is detected. On top of that, estimates put the amount of dirty money in the UK's financial systems at between 80 and 100 billion pounds. The aim of 5MLD is to build on and further tighten the money laundering regulations across the EU, including putting more onus on businesses to do their due diligence on the people they're actually doing business with, and making sure the regulations apply to all sectors at risk of money laundering. Non-compliance can result in huge financial and other penalties, so it's vital that all regulated businesses are fully prepared to comply with the new legislation. Basically, it's any business or individual that falls under the legislation. It's being extended beyond traditional financial service organisations to cover other sectors susceptible to money laundering, like letting agents, cryptoasset exchanges and digital wallet custodians, and the high-value arts sector. The implications to these sectors is huge. They now need to have the processes and people in place to deal and comply with this legislation. Anyone who uses prepaid cards will feel the effects of 5MLD. Tighter controls on the issuing of cards will take effect, meaning the limit on cards sold in person falls to €150, and online transactions where CDD checks are done remotely using prepaid cards will be limited to €50. The country in which the card was issued will also become a factor, and you could even find that cards issued in some non-EU countries are not being accepted at all. Cryptoasset exchanges and wallet providers will face similar levels of regulation to traditional financial services for the first time, including having to submit suspicious activity reports and carry out customer due diligence. All cryptoasset operators are required to register with the FCA, and they've been given 1 year to complete this or cease trading. The new legislation beefs up what firms must do when enhanced due diligence measures are needed. Instead of just high-risk countries, they cover any transaction that is, for example, complex or unusually large, or when the pattern of transactions is unusual, and spell out precisely what information firms must gather. For the first time, the revised regs call out specific sectors that should be subject to EDD measures, including oil, arms, precious metals, tobacco, and anything to do with protected species or cultural artifacts. This aims to bring consistency to enhanced due diligence, where in the past there's been room for interpretation. Relying on basic online searches, as some companies do, is no longer going to be enough, and many businesses are going to need to invest in more robust software that digs deeper. The amended regulations bring some new sections into the fold. For example, banks will have to create a portal, and firms must make sure they provide details of payment transactions on demand. They must also provide key company and customer data to a secure national register that can be accessed by FIUs, law enforcement agencies, and other authorities that might need it, irrespective of whether a SAR has been raised. What can our customers do now to prepare? You'll need to check if the regulations apply to you. Are you now an obliged entity? Are you exposed to any obliged entities? But it's not just if you are one, but whether you deal with them, you need to be aware of. Make sure your beneficial ownership information is up to date. Severe penalties and sanctions could face those who neglect it. You also have a new obligation to report discrepancies found when conducting your CDD checks compared to information on any central registry. Plus now everything has to be fully documented and auditable. Make sure your EDD is up to scratch. Googling a company for background information isn't going to cut it with these new regulations. It only uncovers part of the picture and often misses the important information buried deeper in the web or behind paywalls. Many firms may now need to invest in their RegTech systems. FIUs can now request information at short notice, so you need to make sure that you can report at the drop of a hat. Regulations now state that if you can't respond in a timely manner, you'll not only face fines, but you could have a skilled person imposed on you. More than ever before, businesses will need to have their house in order to comply with 5MLD. The obvious implication for firms is the need to have their processes in place to enable this to happen quickly to avoid penalty.